More coffee. All right. Good morning, everybody. It's 6:30 something on Wall Street, 3 hours before CPI, right? Now, CPI is usually not bigger than FOMC, but everyone's going to use CPI to bet on FOMC. So it's kind of like twofer. Wow. So, anyways, let's get our global macro on and uncover the best fundamental opportunities. Well, I suggest to you that yes, we will get fundamental data, but today and tomorrow is going to be volatility. So pay more attention to the market sentiment tools inside of QuantBox than you probably normally otherwise do, because volatility may not go in the direction of the fundamental truth. Right? There's more than economics going on in the world right now. Hey, by the way, my name is Wayne McDonald. I am an economist. Isn't that cool? Yeah, I went to the economist school. Yeah, cool. Right on. So I love economics. It's amazing. But I like trading and I like investing. So, like, I have someone that works for me that has a PhD in economics. In fact, today he's standing for his PhD dissertation. But he doesn't know jack about investing. Oh my God. So, anyways, you got to be an investor too. And then on top of that, if you're going to be an investor, you should be a trader. So you know how to get in and out with price action. You're like, wow, there's so much to this. QuantBox takes all of this in. So you can look at the economic truth, you can look at the technical trends, you can look at 20-year seasonality, you could look at institutional and retail positioning, and you get wonderful, beautiful colors that can help you make informed decisions. For example, one of the things that's going to change tomorrow is the Fed's summary of economic projections, where they tell you their opinions of where interest rates will be 18 months in advance. So you can listen to the talking heads on TV give you their opinions, which to me is worthless, especially since 95% of people are wrong. We don't need the opinion of people on TV. What we need is the opinion of the people on the Federal Open Market Committee that make the decision. And this is what QuantBox does. And when the summary of economic projections is updated, we update QuantBox so you can see their opinion visually. But not just the Fed, every major central bank around the world. You're welcome. So today, we're going to focus quite a bit in the change of market sentiment. And there's a couple of ways of doing this. Look, it's $79 for the professional service. It used to be $79 a month for something that we call retail. And the retail was sort of a watered down light version. I gave everyone that subscribed to that, I gave them the Pro tool. Just gave it to them. Now there is no light. You're welcome, by the way. Oh, and we're also flirting around with things like Bitcoin. You should check it out. So YouTubers, you might be watching this almost a day late. Why don't you join the team? So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble. Focus on the long term. Never risk money you cannot afford to lose. So let's click on the Pro. See that old retail is still there. Got to be logged into the right Google Cloud. And by the way, it don't work. It's broken. Don't send me an email. Watch the video if it's broken. And you can also test it. If you can, right? If you can't click here, then there is a problem. Okay. Anyways, let us go to. Oh no, I think I really am sick. Okay, come on now. Load in, load in, load in. Keep that dashboard loading. All right. Nothing really happening here right now. So this is your first market sentiment tool. This is a second market sentiment tool. And then you can do a deeper dive into both these tools. I just wanted a quick and dirty for the dashboard. Okay. So the biggest bearish things you can look at, like oil's quite bearish. Aussie Kiwi quite bearish. Okay, Dow bullish, Euro Yen bullish, but bearish trend. Uh-oh. Uh-oh. Isn't that helpful though? Actually, then suddenly you get this red over here. Technically, it's bearish. Fundamentally, it's bullish. It's good to be able to see that instantly. Pretty amazing. Pretty amazing. In fact, there were reload opportunities last night. I don't know if any of you caught that. Nonetheless, let's look at yields. Yields are a little high. Remember, it was as low as 4.1. Now we're at 4.25. Obviously, we're debating whether nobody's debating the Fed raising on or cutting tomorrow. The debate is how many times they're going to cut interest rates next year. And so while we wait this new information today and tomorrow, there's some hesitation here. I'd love for the news to come out in such a way, and I don't even know what way that necessarily is, because again, this is more volatility related versus the other things. But I'd love, let's say a week from now, to see the yield on the 10-year at 3.99. Oh, that'd make me so happy. Means everything is moving in the correct direction. Oil back down to 71. Maybe a buy a dip scenario. We can take a look if you want. Gold stuck at 2,000 again. It was down there 1980, I think, yesterday. So it's come back a bit, but stuck on the psych level. All-time high on the S&P 500. Cool. Euro dollar 108. We've been at that 108 area for a while. And Bitcoin down. Cool. Yeah, cool. Cool. So first risk sentiment that we can look at, not risk sentiment. Well, yeah, risk sentiment. Sentiment is the key word here. Still, nothing's changed. It's been like this, what, a week and a half? It's good to know this information. Nothing's changed. Newer traders, retail traders typically lose the most amount of money. Not when the market's rallying, not when the market's crashing, when the market's not doing anything. Because they force down trades and nothing happens. Doesn't matter if you're a bull or a bear, you're over trading. QuantBox very quickly says, whoa, 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 whoa. Shh. Okay. Nothing is going on. Oh, how do you get to that opinion? Well, you look at the dollar, you look at bonds, you look at the stock market, you look at gold, you look at the yen, and you look at VIX. That's a lot of looking. Put them together in a basket so you can get an aggregate view of the current assessment of the market. And for right now, over the last few hours, nothing's happening. Over the last 5 trading days, nothing's happening. Oh, yeah, sorry, Boris. Yeah, futures, not spot when it comes to gold. Yeah. Okay, and then what? Way out to the monthly. Well, once again, nothing's really changed, just ever so slightly bullish. Okay. And depending on your view of what's happening with the yens, because there's some craziness going on with the yens, or maybe your view of gold, you might have a slightly different opinion where this is not slightly risk on. You could just say it's also mixed. Or you could say it's a little more risk on, depending on your point of view. Like, for example, gold. Here's something I've been proposing to you. Why would you buy gold if we're in a disinflationary period? What? To hedge? There's nothing to hedge if we have disinflation. Okay. Well, you want to own gold because uh, demand because the stock market's doing really well and everybody wants to buy a gold watch. Well, that's also not kind of the economics that we have on the table. We're discussing whether there'll be a recession or not. And if there is a recession, how bad it will be. Will it be a soft landing or will it be a hard landing or a no landing? Or so why do you want to own gold again? Right? It's one of those things. Oh, well, because of the central banks. Okay, explain to me why the central banks would want to own gold. And if you can do that, then maybe I'll listen. But usually, what people do is they just like trading gold. All right, well, that's a whole different world. So, right now, QuantBox is screaming, and this will probably change in the next 48 hours. Almost certainly will change in the next 48 hours. But right now, it's like, hold your horses, Haas. All right. What's going on? Bitcoin, another move down. So happy, right? I did my invoice. So, anyways, I was exposed to this Bitcoin risk, and I waited. It was right. I waited. Then there was a bit of a dip, and when I'm okay with that, and then I in and out converted it, and whew, it was all right. Did okay, and it's fallen another percent or two. So okay, it worked out. Um, uh, 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 uh. Oh, what else is going on? I guess we can get rid of crypto. That okay? Let's just get rid of that. What is the trend? Oh, look at that. That's actually cool. That has nothing to do with the scatter plot. It has something to do that I did on a chart, but that's exactly what I just wanted to draw. Is it sideways? Is it sloped down or is it sloped up? Oops, I'm clicking all the wrong buttons here. Delete. To me, it looks like this. No trend. No trend. It's skewed. It's skewed this way for some reason. Most of them are over here. Okay, these things are down as expected. These things are up as expected. Notice that most of these are crosses. Where are they? Maybe not. Kiwi CAD, Kiwi. Okay, NASDAQ. Okay, maybe not. What else do we see over here? These things are down. So yen, so Kiwi is strong, yen is stronger and unexpected. Yeah, look at all these things. Okay. Now remember, I spent a week and a half explaining or outline and even setting up trades that showed the yens would unexpectedly come down. Now, why unexpectedly? If I expected it, why did it unexpectedly come down? Well, you have to remind yourself that QuantBox does macroeconomic analysis. Okay, it doesn't predict the future. It tells you what it is, what is. And the trend for the yens have been up for 2 years. Yeah. And by and large, we haven't hit a point in seasonality in which these come down. So you could say, well, the economics point this way because of the policies of the Japanese central bank, right? Seasonality might right go this way, but we are also at a psych level for USD yen at 150 at a time of year where profit taking does occur, at a time when a lot of institutional investors are like lucky the year actually turned out good. back in October, they're like, oh my God, I'm not going to make a bonus. And then 5 weeks later, they're like, we're up 10%, right? Like, thank you, right? It just out of nowhere, it turned out to be a good year. But now they're scared they're going to lose that bonus if everything comes down, right? And so there's profit taking going on. Meanwhile, there's rumors in Japan about a change in interest rate policy, but there's rumors in the United States that the Fed will have changes in interest rate policy, and both those changes would narrow the spread and therefore kill the carry and therefore creates more profit taking. And what? But it's all rumors. Well, QuantBox doesn't listen to rumors. It doesn't, right? So the facts are facts are facts, and the rumors do add up. And so now you have to decide, do you buy a dip if these are currently unexpected dips? Now, the economics might change, the policies of the central bank might change, then QuantBox updates. It doesn't listen to gossip. It only knows the facts. And those are the facts. These things are down. I predicted them, but they're unexpected quantitatively. Okay. The trader inside of me knows the market. And that's why we add things like this sentiment as far as expectations versus reality, or baskets, aggregate baskets of risk on, risk off. Okay. That's why we do this stuff. So very cool. So you might look at it and pick a yen here. For example, let's pick a random yen. I don't want to do USD yen because there's too much reserve currency on that. But we can go to like Kiwi. Okay. And you can see typically those yen pairs don't come down in this last month of the year. Oh, they came down this year. But not in the last 5 years and not in the last 20 years. So this drop is unusual. By the way, knuckles, high fives, because I still called it. Okay, that I'm only saying that because you still have a job to do. QuantBox is not going to manage your money for you, but it'll help you gather intelligence to formulate proper strategies. You still can't skip 20 years of investing experience. Okay, but what do we know? Well, the year tends to flatten out soon. So January, February for this asset, Kiwi yen, is slightly bearish. So whether it comes down in December or January at some point, maybe it doesn't matter. But my point is this could continue because out of seasonality suddenly becomes in season again. It's Wabbit season, or at least Kiwi. It's Kiwi season. Okay. So anyways, cool. And I think they didn't tell me, by the way. I just looked at this the other day. I think those son of a gun developers actually did their job on this one. I think they fixed the calendar. No way. It's in order. Remember how it used to go like this one's in 1 hour, this one's in 4 hours, this one's in 12 hours, and the next one's in 6 days. And you're like, wait, how do we get from 12 hours to 6 days, right? Look, it's in order. Shut the back door. So that's cool. And that ugly orange color is gone. I actually did that. You're welcome. All right. All right. So first thing you want to do, get rid of the no importance, get rid of the low importance. It's just too much data. And did it update? Is it going to give us coherent information? It looks like it's in order. Oh my God. No. Gee whiz. No, too bad. Too bad. Too bad. So sad. I got suckered into it. I believed it. Yeah. 9 hours, 7 days, 6 days, 5 days, 4 days. Hang on. Let's hit this. Yeah. All right. All right. Too bad. I got suckered in. What a ninkau poop. What is it doing, huh? So I think it's when I change the importance level, huh? Let's see if I can put it back. There we go. What if I put it back? Will it work? Well, let's just do high only. 57 highs. Wow. All right. And then try to sort it now. No, it's weird. Too bad. Oh, too bad. Too bad. I cry. I cry. All right. Buck. Okay. Core inflation in a couple hours. 4%. Obviously, we're expecting below that. Hmm. So we know Europe is in the twos. Wow. Amazing because, we were at 10 at one point. Okay. So are we going to get below that? Are we going to get a two number? I suppose it's possible. Once again, oil has come way down. This is pricing in oil at 65, right? Or 67. Um, yeah. It's one of these things where I think I'm going to be right in the future. That's why I think the way I think. And I don't like that. I don't like it. I don't like thinking that oil is going to be more like 80 than 60 in the next year, let's say. And that will bring us back above 3.0. So imagine we're at like we dropped to 2.8 and then by February we're at 3.5. What will the Fed do then? Nobody wants to talk about it. Everyone just wants the market to go up. I'm cool with that. Right? I got money in the market, baby. If you can go up. Uh, but my concern isn't that because I expect that. That's why I bought. Well, it's what I don't expect. And then I think about so now I expect the things I don't want to expect. But is it possible oil's closer to 80 than 60? I'm like, yeah, unless we go into recession. Okay. And I have a new tidbit. I know it's not really useful information. It's not even quite true, but the future demand of gasoline, which is obviously a derivative of oil, you'd take crude and you have to crack it, and you get some gasoline out of it. Apparently, Ford can't sell their Lightning pickup trucks. Nobody wants one. Well, what about Elon Musk's Cybertruck? Yeah, he'll sell 10,000, but he won't sell 10 million, right? So, you going to buy a Rivian truck? They make them nearby. They're not far from my home. But interesting, people might be fighting back. And I was worried about that. I think about a year ago, I said, every major automobile manufacturer, which is not actually true because Toyota and Honda don't really want to go there. They don't want to go electric. But nonetheless, every American car company has decided to go all in on electric vehicles. And I'm like, well, what if that's a failed business model? What do they do then when they've bet the farm on going all electric, and then suddenly there's no lithium, right? Or something, right? They're like, wait, lithium goes up 10 times. And now you can't build a battery for your electric car. What do you do now? Oh, there's no plan B. Whoa. Right? Yeah, but that's scary when you go all in like that, especially like if you're an entrepreneur like Elon Musk and you're like, okay, I'm going to build a company and we're going to focus and specialize and we're going to be the industry leader. Okay, that's one thing, but when it's the slow behemoth companies that have been around for 100 years and all they're doing is copying because they're losing so much, that's just stupid business models. That's bad management making bad management decisions because they're like, we're not in control of the future. So let's just copy what everyone else is doing and maybe that'll work. No, no. So, anyways, interesting nonetheless. So let's get back to this. Fed decision tomorrow. Okay. And it's going to be the some people are going to bet, and again, based on today's CPI number, they're going to bet that the Fed is going to cut next year. That's what it's all about. I don't care what Jay Powell says today or tomorrow. I don't care what the result is because they're not going to do anything. That's already priced in. I only care about the summary of economic projections. Since I don't bet or guess or gamble, I only care about the opinions of the members of the Federal Open Market Committee. I'm going to get that document, I'm going to review it instantly, and I'm going to make decisions for the next 3 months. The rest is just volatility and degenerate gambling. So be very careful, and that's going to start today. Now, there's some to kind of add, like I think if we go to Fed Watch, so I don't have this. I'd like to be able to tap into this, but this is a private database. You got to go to the Fed Watch tool, and that is by the CME group. Okay. And this uses analysis of the bond market to reverse engineer mathematically based on price. So let's go out to 1 year, 1 year from now. Okay. So it looks at the price of the bond because they don't pay an interest rate. You lend the government $95.73 today, and in 1 year, they pay you back $100. What yield did you collect? Well, you do the math. You can figure all this out. Okay, cool. And this is smart money lending money to smart money. This is not retail. They don't get it wrong, quote unquote. They negotiate, let's say, $1 billion deal. They just negotiate the price. Both parties have an assumption of future interest rates. They negotiate to what they think is fair. They agree to the money, and you can reverse engineer what they think the Fed funds rate is going to be. Okay. Cool. 99.9% chance the Fed's going to cut between now and December 18th, 2024. Okay. But what level? Okay. So you look at the mean, and here's what you can get where they're pricing in. Okay. They're pricing in, let's say, I'll give you a number. I'm not going to actually do it all, but let's say they're pricing in a 1% cut in that time period. What's the most the Fed has cut in the history of the Federal Reserve? This is the third Federal Reserve, by the way. Okay. JP Morgan's Federal Reserve. How many times have they cut 1%, let's say, without a recession? In the entire history, none. What's the maximum they've ever cut without a recession? Remember, the issue is Fed funds rate is at 5.5. So let's say now inflation comes out 3.0. So now the spread is, oh my God. Okay. Oh my God. Okay. The spread, well, and I shouldn't use that. That's headline. So let's say core comes down to 3.5. So we're still at that 2.0 level, not just headline, but even now core. And that's 200 basis points. So that is too much. That's what's going on. That's just too much. It's too restrictive. If they leave it there long enough, no one's ever going to sell a house, right? No one is ever going to lease a car. No one is, and all of a sudden, the consumer will hurt. The economy will slow down. People will lose jobs, and maybe the Fed has gone too far. Now, I think the Fed is totally capable of going too far. Remember, they were only a year and a half late for responding to inflation. And then suddenly it's their number one goal. You're like, whoa, dude. So are they capable of leaving this for much longer? Oh, yeah, I think so. But nonetheless, that's not what's happening. And my opinion is irrelevant. It's what the market's doing. So the market is pricing in like, dude, 200 basis points is too much. So the Fed needs to cut at least to get us down to a 100 basis point spread. And that, right? Right? So that gets us to 4.5 with a core of 3.5. But then if core drops to 3.0, then this should drop to 4.0. And you see the pressure, like the Fed cutting 1 to 1.25% to 1.5% is all what's being negotiated and priced in right now. Okay, well, here's the problem. Based on the history, the most the Fed has ever cut, ever, without a recession, 0.75. So if the market is saying, no, they're going to cut 1.5 because inflation is still going to fall, therefore the spread is going to go from 200 basis points to 250 basis points to 300 basis points. And that's just too much. So the Fed needs to cut 1.5. Okay. Well, they're telling us a couple of things. Well, their logic. We don't know if they're actually being logical, but they're saying we're either going to go into recession, and that's probably not priced in the stock market, or inflation's not going to fall, and therefore the Fed could cut 0.75, but then inflation will creep back up and then they'll stop cutting again. My worry is when you look at all of this, even though they're the smart money, they're a bunch of knuckleheads. They're the leaders of our market and they have no idea what's going on, right? They're like, dude, how could you get over here? And how could you still be over here? And this is the smart money. This is banks negotiating with banks, right? It's just like, wowzer. So there's a lot of people wrong here. And I think what's happening is all of this needs to shift this way. And these guys are probably closer to the truth. But what I think, again, is irrelevant because I don't know the future anybody else. But then when I see this happening, what scenario creates the Fed dropping it all the way to 4.0 now? Oh, a hard landing. Okay. Now, Jim says the typical cut is 25 basis points. I don't mean all at once. I mean like throughout the year. Okay, Jim. So like, I think if the Fed wanted to cut 50 basis points, I think that's what might happen. If they're going to cut because the spread's too high, okay, that's fine. But I also think that core inflation's going to stop falling. So, so how do they handle that? Then we got the election. Typically, the Fed doesn't change policy around the election. So now here's where everyone's betting. The Fed's going to cut, I'll say it, let's say 50 basis points to normalize the spread. So it's restrictive, but not too restrictive. But the thing is, then they got to get that done before June. So, boy, we really need to convince the Fed inflation is tanking, and we're going from disinflation to deflation. Well, then oil needs to fall down to what? $30 a barrel, $40 a barrel. Not 80, not 60, 40. But then again, that's recessionary, right? And we don't have any signs of that. So, like, you might say, well, I think next year is going to be a hard landing. We're going to go into recession. Well, there's no evidence of it yet. Inflation expectations are coming down. We are in disinflationary, but we have huge growth currently. Now, there's lots of base effects, but nonetheless, consumers are buying and all that. Like, you could guess we're going to go into recession, but we're not there now. So, if we're going to have evidence-based investing discipline, that could be true, and we can monitor for that, but that ain't happening. So look at even the smart money doesn't know what's going on. We got to be very careful. And there's going to be a lot of guessing based on what this CPI means. And of course, all it's doing is telling you what happened last month. Oops. I got everything going all over the place. Oh, right. Oh, it's just telling you what happened last month. So we got to be careful. We got to be careful. We got to be careful. I recommend in the next few days letting technical analysis guide you. Okay. The second thing I think you should pay close attention to, where'd my QuantBox go, is the sentiment tools. In particular, I think I would just leave it here. That you should have this up and running. Okay. Refresh it from time to time. Okay. You can just go to scatter plot and back and see what's happening now. Okay. Or leave it here. You can watch all of this, including prices. Okay. If 10-year yield is falling, that's good. So if you don't understand that relationship, right, then you want to leave it here because it'll tell you how did QuantBox make that decision? What's volatility doing? What's the yen? What's gold? What's the S&P 500? What are yields doing? What's the dollar doing? And it's analyzing all of this in real time and updating this for you. And then if it goes risk on or risk off, it suggests assets to look at to be bullish or bearish. So there's ever so slightly a risk on sentiment. So these are assets that you might be interested in. Doesn't mean buy them, but you're better at looking at maybe if you're interested in buying them, now you do your technical analysis. Notice none of this is doing technical analysis. So you might just say, well, how is Kiwi dollar doing? How is Aussie dollar doing? Okay. So there you go. I want to look at oil and then I'll let you guys go. It's a very important day today and we got lots of news coming soon. But I did want to look at, here's one that I did in the Investor Bootcamp's day trading group last night. I said, wait if you're interested in being a bull. Okay. If you're interested in being a bull, and so I guess you're sort of like an Elliott wave person, like a 3-wave correction. We did get back to this support level. Okay. Was resistance, then it was support. Okay. 3-wave correction on this smaller time frame. So maybe on a daily or weekly, it's much different. It's much more of a dip than a correction. But then if you were interested in being a bull, you got to wait to get above the moving averages and wait for a scenario in which it seems the moving averages are acting as support, not resistance. Okay. So that would be proper price action. Can anybody tell me what's going to happen the minute CPI comes out in about an hour? I don't. I don't know what the number is. And I don't know how other people are going to trade it. I can throw down some guesses right now. I could guess, but that's not how I trade. So you could have a scenario of whoa, but you could also just as likely have a scenario of whoa. Sound like a good opportunity to make money? You don't even know how many bullets are in the chamber, and you want to play the game? No. Could be 0, could be 6. Uh-oh, right? Not good. I just watched Deer Hunter the other day, and I'm like, that's like trading. Oh, most interesting thing about that movie is you get to see America, what it was like in the late 70s. A completely different America. It's really, 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 really remarkable. Okay, but anyways, yeah. So have we even broken out of the range? No, not really. No, no. So yeah, today's dangerous. We're gonna get some vol. That's it. That's how I look at it. And I'm more interested in all of next year than all of the rest of the morning. But we will get the news. I would like to analyze it and then also see how the market responds. And I think there's going to be more of a sentiment response than a logic response. I think some of the market is desperate for the stock market to go up. I think some of the market is hungry to take profit and get out. And probably both are going to be rewarded today. And if you're an amateur, you're somewhere in the middle. See, there are buyers way low. There are sellers way high. And amateurs are just in the middle and they get run over by bulls and bears. That makes you a pig. If you're not a bull, if you're not a bear, you're a pig. And pigs get slaughtered. I'll see you later. Peace on earth. May the pips be with you. May our profits be above average. Cheers. Beep, beep, beep.